Yeah, inshallah, bismillah. Let's start. I think we are 3 minutes down the time. All right. So, bismillah rahman rahim, everyone. Again, my name is Fahad Siddiqui. We had a very wonderful class yesterday. Um, I will do a quick recap. Yesterday, we started the class with the overall view of the tokenization market, the trajectory it has, the potential it has. Um, Probably we spoke about how many worth of assets are only tokenized. We spoke and discussed about the process flow of tokenization. We discussed understanding between the cryptocurrency and the security token. Then we went and review couple of token standards available in the world that we can utilize for tokenization. We discussed the efficiency, what is the difference between today's market, capital market inefficiency, and when we deploy blockchain infrastructure, then where the efficiency, how the efficiency will be executed using the blockchain. Let's move to the next slide. I will discuss this already yesterday. Let's move on. Um, Okay, and today we are going to start. Yesterday we were mostly discussing about the tokenization from the product perspective. And if I'm a product manager, if I'm an auditor, if I'm a Sharia auditor, for example, or Sharia control officer, or if I am a business manager, basically, who is looking to deploy blockchain infrastructure in my bank or in my fintech or whatever I'm going to do, uh, maybe I have a capital market license, then what is the benefit? Why should we do it? Why it is efficient? Why it is more secured? And how can I do a couple of use cases like we discussed yesterday, real estate, commodity or gold tokenization. We discussed the Sukuk tokenization and funds. What is it? And there was a very good question asked by one of our participants that what is the difference between the securitization and the blockchain tokenization, right? So we discussed this. Today we are going to shift a little bit. We're going to wear a hat of a compliance officer, a risk management officer, or a risk management or CRO, which is a chief risk officer. We are going to still be the product manager. Of course, everything revolves around the product, the revenue. We will talk about some revenue opportunities we have. Probably if we get time, we will also see live demo of Mabrook, how tokenization is happening in real time. So you have a visual optics of it as well. And then we'll continue with our discussion, inshallah. We'll do a couple of QAs as well. All right. So today, first, let's start because yesterday we did not touch any point on the compliance side, right? What is the regulation? What is the compliance? Today, if in my bank or in fintech or if I am running any Islamic financial institution, when the customer interact with us, the first thing we ask customer is to do KYC, right? They have to fill bunch of, they have to fill like a form, they have to sign the form. How that works in blockchain, is it different? All right. How that is happening because my bank does not know how to go and check what this person is doing on the blockchain. I mean, I can go and check the United Nations designation, for example, black blue list, right? I can see the Federal Reserve agencies black and blue list, and I can do PEP, politically exposed person checks on my off-chain world, like a normal world where I live today. But tomorrow, Fahad, you are asking us to shift on the blockchain. When somebody comes and they open an account with us, we can check in our world today what is going on, but how we are going to do in the blockchain. So we're going to check that. And just a heads up, the verification validation in blockchain is at least 10x better than the off-chain world. Why? Because in blockchain, everything is documented. Remember, yesterday we were talking about when you write something in the blockchain ledger, like a book, there's no way you can go and delete it or modify it. It's immutable. So imagine we have the cryptocurrency market today stands at 3.2, 3.3 trillion. Maybe the potential size is around 4.3, 4.4 trillion today if the market is little bullish. And we have 730 million odd cryptocurrency owner. Whatever they are doing on the blockchain, as far as the blockchain is connected with other blockchains, we can go and that's a digital economy, right? We can go and we can check the record. We can ask the blockchain, here I have Hassan, he is asking to buy my token, and I want to know everything about him in the blockchain. So I can know his ownership, how many cryptocurrency he owns, what is the value of that cryptocurrency, how many he owns it, is what was the source of income when he bought that currency. As far as the blockchain is authorizing me to do so, I can do it. And there are certain protocols you can just go and then fetch all other irrelevant information which I don't need about ISIN. There's a whole protocol around it, and we will discuss it. It's just like one bank talk to another bank, but in an efficient way. We don't have to do it manually or via API and some limited API, or we don't need a middle broker. We can do it very fast. All right. So let's move to the next slide. All right. So when we are onboarding, so in our example, this is an investor. It can be anybody who is interacting with the platform, and you can basically run the AML, KYC, CFT checks, and all that. What we do is that when they log into the platform, first thing we go to ask them is that give us your email address and phone number. No change. It is as good as the or as same as the digital bank, right? Who ask us to open in a current account or a savings account. Then what we do is that once we have all the information, we are running the PAP checks and all that off chain, like in our regular environment. And also we run those, we go and we execute a command on the blockchain. And there are tools available. You don't have to code it. Tools like chain analysis. You give chain analysis enough information which is required, and it will go and fetch the information from the blockchain. How it does it technically, I mean, that's not the purpose of the training today. Just understand the concept that there are electronic ledger line, as I was explaining, and there are different computers across the world. It is just going in millisecond on those across the world computers and reading from that data ledger where this user exists, and then getting the information for us. So our compliance officer or our MLRO, anti-money laundering officer is reviewing the data. And once that ID is verified, yes, this ID on the off-chain and the on-chain both are available. What he said about him is right, right? We are going to whitelist it. Whitelist means we are going to approve it. Approval means the compliance MLRO will review it, and they will review the data. They will see the forensics. They will see the biometric, the photograph, the live video. They will see the validation of the ID, right? All that it will be done on the platform. The way we do in Mabrook is everything is automated. No manual checks. Everything is given into a dashboard kind of a thing, and all they have to do is just review it. And if they have more questions, they can drill down. And if they want to run an extended due diligence, they can execute from the platform and do a rigor, like a deep research on that. Once they are happy with it, they whitelist it, meaning they approve it. And when they approve it, they have to get kind of a risk profile. We maintain it. Risk profile could be any profile, like a low risk, high risk. Let's say somebody is PEP exposed and is high risk, or he's in a country where the country status is gray list, right? All that, just like in our routine Islamic banking processes. We're going to risk profile, and then at the last, we are going to give them the limit. Limit means that we are going to give them the limit to invest. We are going to give them the limit how much they can top up on their wallet using the USDC or Bitcoin or a fiat currency like dollars. And we're going to also put some information on our platform, on our blockchain, on our ledger, just like the other blockchain we were talking to, they were doing, and we're going to rotate the information back to them. And we're going to update them, minus any sensitive data of investments and whatnot. We are going to suppress those private information, but at least we're going to update all the ledger that, okay, this new customer is now existing. He exists on our blockchain, our infrastructure, our application, and this is what we have. This is how we have done the whitelisting. This is his latest status. So if they are doing whatever they are doing, that's they know. The other thing, voice is not clear. Hassan, can you hear me?
Yes, loud and clear.
Okay, all right. So I just put my another. airport. I hope the voice is clear, Zarfan. All right, so let's continue. Uh, and then we're going to start the monitoring as well. Okay, one thing on the bullet point six is very important, restrict transfer to whitelist address. So I want to just emphasize on the token standard we spoke about, and we're going to today discuss the token structure as well. So think of a token as a sub-ledger, a place where I can embed some data, right? Just like when I am writing something about myself, I write my name and my address, what I do, my designation, my degrees, and all that. Similarly, in token, we can also write the customer information on that token. Okay. And when we write that information on the token, we can also write the some restriction. For example, the person is from a high risk country, and although I have whitelisted him, there are certain restrictions this he cannot do with this token. Okay, meaning that I can say that he can sell this token to somebody in, let's say, Pakistan or Bangladesh, but he cannot sell it to anybody in Korea. Example, right? So that will be very unique to that person. And what is that token called? It is called an on-chain ID token. Meaning, remember we were talking about the tokenization, and we were talking about somebody invests and we give them the token of that tokenized SPV. We were just, talking about yesterday, like a company share or a real estate share or gold share. We can also create, when we have open an account, a token for that person. That token is just called an on-chain ID. It means that it is an identifier of Fahad Siddiqui without telling his real name and address and all that to public. It tells what are the business rule defined on the Fahad level. And since there in the blockchain we have two kind of world. One is like a world which belongs to more decentralized way of doing things. An example is Bitcoin. There is no central authority. We can do interaction or transaction of the Bitcoin without any central bank. In the example of Mabrook, we belong to the world where we say that a decentralized application, but in a centralized way, meaning we still report to the regulator. Otherwise, we will not be compliant. So in that centralized environment of the blockchain, what happen is that then the on-chain ID is maintained. If there is any prevailing updates on the customer that we know. For example, Mabrook is rolled out in UAE, and Virtual Asset Regulatory Authority executes a circular that there are a couple of countries the token transfer should not work for some reason. All right, it could be anything. So what we can do is, in using our control, since we are maintaining all those on-chain ID and they exist on our blockchain and they are interacting with the other blockchain to verify the customer, we can implant update that information, and the token will behave like that. So even if the user wants to transfer the asset or token to somebody, and the on-chain ID detects know that this specific user cannot do transfer to some country, the destination country, then it will not do it. Will say, sorry, your profile or ID does not gives you a right to transfer the access, and he can contact or she can contact the customer service, and we're going to explain them, although he will receive information well in advance on his notification screen. All right. So I just wanted to give you an idea that using on-chain ID and the blockchain, you can put those restrictions on the token. So you are still compliant and the environment is safe and secure. Of course, in the manual world, once you issue a share stock, let's say even the share is on the electronic format, there is no restriction. The only restriction he can get it from the SWIFT. So when he's transferring the fund, the SWIFT will deny it or the bank will deny it, right? So it's kind of a more robust way, and it can happen 24 into 7. You don't need a middle broker or a compliance person to flag those. All right, once that on-chain ID is created, the KYC whitelist happening, on-chain ID happen. Basically, we start monitoring process, and there are tools available, and Mabrook comes out of the box solution where basically you can start monitoring the post onboarding process, what that customer is doing. Is he in my restriction which I applied on it, or is there any unusual transaction pattern happening? The system basically go and flag it. And remember, when I'm giving this statement, of course, whatever you are using today in monitoring in the off-chain world, there are tools available for the on-chain world as well, on the blockchain that does it, right? So all you have to do is wire it up with your platform and do it. Mabrook offers everything together. All right, and then of course we can do the suspicious and activity report and CTR, meaning currency transaction reporting, and UTRs as an unusual transaction reporting, or we can also flag some criminal activity as and when it's happening in the blockchain. A classic example is, let's say uh, the user on a Brew platform loads a Bitcoin. All right, when we executes the chain analysis on the, of course, we have his on-chain ID, his whitelist, so he can do it. The moment he does it, we execute in chain analysis and we try to see where the source of blockchain is, where this Bitcoin is coming, and we can validate and verify, and we can take the decisions around that. Okay, let's move to the next slide. Okay. Okay, so now since we understand the KYC, we understand the products, let's talk about the revenue opportunity, the core of the course, right? So now we understand what is the difference between a security and cryptocurrency. I get the idea of the process, how we are tokenizing. I get the idea of use case. If I have to tokenize anything, how can I do that? I get the idea on investor onboarding or onboarding the client um, based on an idea that I am a regulated bank, right? And or I am a regulated financial institution. What are the revenue opportunities I can build on my business plan? Okay. So there are a couple of scenarios you can do. Remember when we were tokenizing yesterday, and in the processes we have somebody called custodial. Then I explained that there's something we will discuss in class 2. A custodial is basically, if you are an Islamic bank, right? What you can do is that you can take the custody of the digital asset, meaning when the investor buys the platform from the platform, to avoid the conflict of interest and or to give extra security to the investors, what we can do is that we can tie up as Mabrook with some Islamic bank, right? And then that Islamic bank can take the asset storage or custody of that asset. Just like when you buy gold from a bazaar or a market, there are two options. One is that you can keep it at your house, which is not safe and secure, or you can rely on a third party. You don't put it on the same gold shop that you purchase, right? Because of the conflicts of interest. Maybe that gold shop is providing that option to you, but you feel more comfortable that, whenever I buy anything, like a stock or my property documents, I want to keep it at my bank safe. Similarly, same concept applies. The bank can be geared and deploy a platform like Mabrook. They can, or any platform who provides a custody software. They can deploy that software. They can certify, integrate it with their existing systems, and then they can take the asset custody. The moment investor buys it, we ask at Mabrook level or a platform level where you want this asset to go. Do you want it on your own wallet, or you want to keep it at your bank? They can select, and then they can move their asset from their wallet to the banks, and then everything is tied up. Of course, when I say move to the bank, it does not mean that the token is not reporting to that wallet. Still, they can see the health of that. So, and the bank can charge some asset management or custodial fee. So that is revenue number one. And I think this is one of the low-hanging fruit. You can deploy any infrastructure today with just custody, and you can do that. Other is the issuance. So let's say if the banks end up doing tokenization and they're launching Sukuk and funds, they do today, just like they do today, but tomorrow they switch into blockchain world. They can deploy again platform, and then they can start issuing those tokens, and they can charge like a fee. Just like when you go to merchant today and you buy and you do shopping, the merchant is charging you. There are some fee charge the bank charge merchant some fee, like sometime 1.5 or sometime 2% or 1%, whatever their agreement is. They're charging merchant to activate that point of sale, right? And maintaining that point of sale. Similarly, the bank can also charge some issuance fee, or like an online portal and a marketplace, and they can run on it. Liquidity is another thing. A lot of platform like Mabrook or Coinbase or Take Finance as well. They need liquidity uh, pools. Why they need liquidity pools? So when an investor buys the token, they also expect it to be traded. Like whenever they want to exit or they want to sell the token, or they should be able to do it on the marketplace or exchange. Similarly, what bank can do is provide that liquidity and charge that platform some commission or some fee to maintain that liquidity for the trading. Um, okay, just think of it, custody. We can like the three low-hanging fruit that bank can do today in couple of weeks. They can deploy infrastructure like Mabrook is custody, issuance, liquidity. Other thing bank can do is that when they are taking the custody of the digital asset, they can pop up like a notification to the customer that thank you very much for selecting us for the custody service. And once that is done, when custody is happening, they can also offer a takaful or an insurance to the customer. That by the way, if you want some insurance on that, we already have insurance available for you. So that's an added advantage. Another thing the bank can do is that execute the inheritance, just like estate planning. If the banks if the bank can offer a service that there are a couple of legal documents that you can sign, you can give us your next of kin, and we can aggregate the digital asset on the inheritance. They can also charge some fee for that features. The last one is tokenized current account, saving accounts, meaning today, individual come to the bank branch or use mobile banking, open an account. After the onboarding, they can go ahead and open an account, right? The traditional current savings account, the debit card is issued. They can also launch a tokenized current account, saving account. How? Since in our platform or the platform of the blockchain, you can also load a USDC, the stable coin or Bitcoin or whatever. You can launch a stable coin or a cryptocurrency like regulated cryptocurrency like Bitcoin or XRP, current account, saving account, you can offer to the customer that, by the way, you can also do savings, or you can open a current account with that, and we are going to issue a debit card, and you can do transaction with that. And just like a normal account, we can uh, um, we're going to maintain your account and you can do shopping as you do today. And but the only difference is that once you do shopping, you do shopping in US dollar or dirham. We are going to settle the term and dirham, and then we are going to take that equivalent amount from your stable coin or Bitcoin. All right. Other thing what in tokenized account they can do is they can open up a new account. Like that's a point eight. Uh, we can offer like a gold backed savings account. So we tokenize gold, and the savings of the or the yield they are earning, it's coming from the gold, right? So the equivalent amount they open the savings account, we can buy a gold from them, keep some money with the liquid asset, and we can execute those gold pools or silver pools or oil pools or whatever in our as a mudarib in our mudarba pool and connect those yields with those accounts. So those are the low-hanging fruits. And once you deploy the infrastructure, I think the sky is the limit. You can be as creative as you want. You can create combination of everything and do that. You can extend it, those use cases. Another opportunity could come is that when they open a current account, savings account, you can also keep that as a collateral and it's to Islamic financing. Okay, let's move to the next slide. All right, so yeah, I think we touch it, but let's see the how can we tokenize the current account and savings account. Let's move on to the next slide. Maybe we can discuss a little more. So as I was giving example, once the KYC and everything is done, they can deposit a stable coin. We have some Sharia pool, which are crypto asset Sharia pool, right? Or commodity Sharia pools, which are tokenized. They are earning some yield, and we can mint those Madare pools tokens around that, and we can connect tie up those tokens with those accounts. We can charge some sort of an issuance fees on those tokens, we can charge some yearly Mudarif fee of maintaining those Mudarif pools, and we can basically apply the Wakala model just like we have in fixed deposit and savings account. Um, Size, of course, we discussed the size of order, but since a lot of product managers are very peculiar about numbers, if there is a bank with, let's say, 1 billion AUM deposits today, right? They can generate $5 to $10 million worth of revenue, gross revenue every year, depending on their market and competition. Okay. So it's a first mover advantage. Whoever wrapped it up, right? They can basically go ahead and open up like an entire new revenue or line of business which deals with the crypto asset. That's what is it. Let's move to the next slide. Okay. And a couple of other examples are coming. We are talking about yield tie up with the annual profit yield from the Sukuk pool. We can distribute those profit weekly on those savings account or Sukuk backed say accounts. We can use the structure we discussed about. We can deploy. Let me just switch it. Okay, so we spoke about the infrastructure yesterday. First gate is that you need to have that infrastructure. You need to nail down the blockchain you will be, the platform you're going to use, and then you're going to integrate it with your existing banking system, or you can just buy a platform like Mabrook or Securitize or Tokeny, and you can integrate it as far as you can do some certification around it, minus Mabrook. Um, Once you deploy it, you can basically turn it on. And if you don't want to deploy it and you want to build yourself, the first step is that you have to identify the blockchain you want to be. Polygon is one of the famous, Ethereum is one of the famous. Once you deploy that, you select the token standard you want. Remember the token we were talking about ERC, and today we'll talk about the structure of the token. You can select that. You have to build some smart contract around it. You need to build your KYC onboarding processes, all those issuer management and investor management from the back office. You have to build that. Once you do that, you can start a product like Sukuk. You can start staking app yourself, just like the savings account we have or fixed deposit. All right, what we discussed. And you can build those staking app connected with some Morava financing funds, for example. Right, so people deposit it. What they are doing is they are empowering that fund, and that fund is diverted to some work like say student financing or car financing or home financing or whatever it is. And bank is using that, and when whatever the bank is earning back, just like we do today, it is being distributed to the investors minus the fund management or Mudarif fee. All right. So an example could be Saudi token launched for savings, but now they have a bridging because the UAE investors can buy it, and both Saudi chain and the UAE chain they are connected, and vice versa, right? So from UAE, I go into my bank. The bank has their blockchain infrastructure. Bank has tie up with the Saudi bank. Saudi banks open up a Sukuk or some Murava financing pool. Staking executed. Staking is nothing but it's a pool of fund, right? And what they do is with their integration, now the bank user in the UAE, they can buy it, and the transaction is happening real time on the blockchain, and settlements happening real time blockchain. Of course, the bank can earn like a bridging fee of doing that. Why? Because they are turning on some product which is a Saudi product to UAE consumer, and they can charge like a bridging fee that they are facilitating the transaction. All right. Um, Profitability, yeah. I mean, those are the basics of blockchain. So, our market or a trading market, and the bank can charge some liquidity premiums that I'm turning on the premium for you. So, whatever trading fee you are earning as a platform, kindly share some with us, or they charge a fixed fee. Um, they can also charge swapping fee, meaning swapping fees are other revenue opportunity. So, for example, you have deployed a blockchain infrastructure. Remember that investor was coming, and we were issuing an on-chain ID. Once the on-chain ID is there, the wallet is activated, it's whitelisted. Wallet is like my account. once that account is activated, I can maintain both on it. I can maintain fiat, I can maintain the crypto asset like my tokens, my Bitcoin, I can load USDC, stablecoin, or XRP, whatever I'm maintaining on my account. And I want to swap it because sometime I want to swap my Bitcoin to be, let's say, in dollars or dirham. I can do swapping. So that swapping fee bank can also charge, right? Those are the traditional fee exchange are charging. But since we are going to move the infrastructure, deploy the infrastructure in our bank, and we looking to capture that market, those are the couple of opportunities we can get onto. All right. So we are talking about logging like trillions of dollars because remember the market today is 730 million odd, 3.3 or to 4.4 trillion real value of the cryptocurrency market. When we start tokenizing, and we are expecting those Bitcoins and Ethereum coins to basically settle those, but the consumer can use those Bitcoin or the cryptocurrency they are holding using our asset. Um, Not only commission, but the entire ecosystem is churning a lot of revenue opportunity for you. So you are unlocking now because you are connecting the cryptocurrency to the tokenization world, and you are also bringing the traditional world, like all your off-chain clients, which did not have any cryptocurrency, into your infrastructure, and you become like the what you call the marketplace of everything. You combine the crypto world, you combine the non-crypto world, you're bringing more asset onto the blockchain, the entire engine is running, you are generating a lot of profit around that. All right, let's move to the next slide. I think we discussed that. Let's move on. Yeah, this is also discussed. Right. All right, couple of recap because I think I know is like it's pretty deep. All right, and you need some time to sink in on it. Uh, But in Mabrook, there are a couple of use cases. The one I told you, which is going to be live very soon about the building. So real estate tokenization you can do. You can execute digital sukuks. You can issue tokens, and of course they have the ability to download the PDF and that QR, which is there. Anybody can use an off-chain world to verify the authenticity, and they can also verify the authenticity on this using the same code on the blockchain that okay, this Fahad who is saying that I own this digital sukuk, I can go onto the third party applications and I can scan and I can verify it. In our example, it could be polyscan, right? So every blockchain has a website, like a normal website. You can go, you can right now type Polygon scan on Google. When you go into the Polygon scan, it will ask you to give the token ID or the address. And the moment you type the address, everything pops up. So it gives the legitimacy. Keep in mind that no privacy information is available. It's only the token ID or on-chain ID you can verify with some limitation. And then there are some tools you can also suppress the data more, right? We can do ethical, like we can do commodity staking. One of the revenue opportunity which we did not discuss is remittance. Remember the Saudi and UAE example, if they both banks are tied up, right? Maybe I will change the example to be real. So Saudi and let's say India or Pakistan or Bangladesh, right? Or Philippines or Nigeria. Uh, when those banks are connected using blockchain infrastructure, and I have USDC or local fiat currency or a stable coin, right, or a central bank digital currency, I can send money from my wallet to let's say Pakistan in millisecond, and the receiver at the bank end level they can settle it because everything is happening validated via blockchain. So that's one of the other example. Let's move on to the next slide. Okay. So whatever we have discussed in couple of above slides, what we have tried to do is put together, summarize it for you in key points. So once that slides are with you, you can review it. But basically, we can divide revenue stream at a high level. And I know you guys are super creative. You guys can create like I don't know, numerous revenue stream. But the highlights are custody, so secure storage, we talk about the fee charge and the AUM and then insurance, and we can also execute a zakat calculator there. So the digital asset custody you have for the client. You give them an ability to calculate zakat, and then you can also divert that fund into the charity account of the bank or wherever they decide. Issuance, you can create, when you deploy the blockchain infrastructure, you can go into the market as a bank or a fintech or a capital market licensed capital market company that, hey, by the way, guys, anybody who's doing funds, they can come to us and we can create and distribute those token for them, and we can maintain the entire tokenization and exchange life cycle for them. Then liquidity you can provide as a bank, whatever the added liquidity you have, you can hook up with the digital exchange, that the DEX, which is written on the middle ways. DEX means digital exchanges or the market makers. You can basically give them that liquidity and charge them. That's, I think, it's a high revenue right now because those are expensive to get. Overall summary is the holistic model we have combined can be an end to, can we can have revenue opportunities on the entire tokenization life cycle. There's something I intentionally took out the slide, which is soda. Soda is not the pop or the cold drink. It is basically a standard command coming out of the MIT. So similarly, just like we have a SWIFT system today. So SWIFT is a bunch of ISO standard messaging, right? So when Fahad is sending money from US or Canada to Pakistan, let's say, and he's transferring the fund, the two banks talk into the SWIFT language, right? Those are ISO languages. One of the latest ISO messaging standard is 220022, which is payment modernization, right? Similarly, we have a soda from coming from MIT, and this can be a takeaway of the class. When you have time coming week, just Google SODA space MIT and try to see what is it. What it's trying to do is that basically set the standard of the interoperation of the token. So when the token move from bank A to bank C, what is the structure we should follow? Because remember, Bitcoin can be settled on the Bitcoin blockchain. It cannot be settled on Ethereum blockchain. So what is the solution, right? So how to create, because in banking world we have to do settlement real time using blockchain, and we expect it to happen just like an email is sent, right? When I send an email, you get it. But in a scenario where we have multiple blockchain, that is something being wrinkled out, and one of the good standard which Mabrook is following is SODA standard. All right, let's move on to the next slide. I think this is yesterday's slide. Let's move on. Okay, let's go to the class. Yeah, move on, move on. Let's go back. Yeah, let's go back one time, Hassan, just so we don't have missed it. Okay, let's move on. Okay, so let's talk about some regulation. Let's talk about some risk and challenges. Okay, now this is a very important process. So we are moving from the product management. So we started with the KYC compliance, MLRO, right? We talk about the AML compliance and whatnot, how it works. Then we spoke about some revenue opportunities. We went into a couple of revenue streams, right? And we were just discussing how the entire infrastructure can give us an opportunity to generate revenue. Now we have to do some a discussion around the risk management cycle of it, right? Because um, any financial product we are rolling out, there has to be a proper risk management framework, which also, of course, include the Sharia governance risk as well, right? Sharia compliance risk, or and what we are going to do if something is not compliant with Sharia. So the the key differences are, I want you to think is that when we are deploying the infrastructure, the cybersecurity is one of the key risks, right? But let's go one by one. Why don't we activate a poll right now? Asan, do you have a poll ready for this one?
Yeah, we can type in the chat on the same thing.
Okay. So if you guys can tell me that with the knowledge you have, and mashallah, yesterday you guys were telling me you guys have a reasonable understanding of the blockchain, right? And some financial world. Tell me in from this 1 to 5. These are the option 1, 2, 3, 4, 5. which challenges you see is the highest risk in tokenization, whether it's a regulation, because when you're doing tokenization, the regulation is very unknown for you. Is it market volatility? Because you feel that the tokenization, when you launch the tokenization, it will behave just like a Bitcoin, Ethereum, and market will go like a roller coaster, right? Up and down. Or it's a cybersecurity threat that you feel that no, I think the regulation and market volatility is not a major challenge. The major challenge is cyber threat that somebody will come, the hacker will come and take the tokens out of it, and I will have problem. Or the Sharia compliance that you are still not familiar that the tokenization is Sharia compliant, and I might have a Sharia compliance, or you don't know. I saw somebody raise up the hand. We have a Q&A session just right after the class. So hold on your questions, maybe write it somewhere, and inshallah we'll have an opportunity to discuss those. So I'll give a couple of seconds for everyone to type in from 1, 2, 3, 4, 5. They can type the number and let us know. Okay, so it's a mix of everything. Most people are hitting three cyber threats, which is really good. All right, let's move on, Asan. So let's try to, and you guys can continue typing it, but let's move on. Okay. So risk management, of course, cyber threat is one of the thing, and what we will do is that we I think we have a subtopic to discuss risk and what are the risk categories and how can we implement those risk categories into our ecosystem of tokenization, and how can we safeguard around those risks, right? And how can we mitigate those? Before that, let's discuss some implementation strategy, right? Because risk is part of it. Like, what is the implementation happening, and how the implementation is happening, and we go from there. So step one is that when we are doing issuance, so you have an asset, all right? Let's start with that. Then we come to the risk management, how where is that cycle is coming. So when you are onboarding an asset, it can be real estate, it can be a commodity, it can be Sukuk or funds or mutual funds. What you do is that first you pick up the token standard that we discussed about, right? It can be a 3643, ERC 1404. Those are the standard available in the market. Or you simply sign up with a tech partner like Mabrook. Mabrook take care of it, or Token or securitize, the example I gave you. Then you go ahead and then take that asset, apply that standard, you go ahead and tokenize it and onboard it, and you can basically apply your traditional Islamic finance model, the one we discussed and showcase you when we were talking about that property tokenization. Let's move on, Nassim. Once that is done, what, right? Hassan, we'll come to this slide later. Can you move on? Yeah, move on, move on. Let's go to the risk management first. Yeah, just stop there. Go back. So once that is done, remember the process, the same diagram we were discussing about. Once you do it, you run your Sharia compliance checks and the risk management we are going to talk about. We are going to execute it on the prime distribution like an IPO, ICO we discussed this yesterday, and then it goes to the secondary market, right? And in between the primary market and the security market, you are doing the entire token management life cycle, meaning just like when you maintain a current account, savings account product, right? Or a fixed deposit product. Similarly, you're going to manage the tokenization using the platform. Let's move on. Hasan. I just want to go to the risk slide then. Yeah, go on, move on. So I know it's very small for you, but I wanted to, since we executed the poll and couple of folks asked us, the way at least what we have done some research in last 3, 4 years at the Mabrook level with our chief risk officer, we have done some weightages. Take it as a best practices, and of course, you can improvise based on what are you doing and where are you tokenizing. But this is like a guide, 27 risk guide that you can apply. So, the major risk. So it starts from the cyber security and technology risk, rightly as you said. Number three, that we have to prevent it against hacks, exploits, data breaches, right? All those privacy exposure is that somebody come and then they can suck out all the privacy information of the client and they can expose it to the dark web or something. That is the priority one, and the weightage is 12. Now this is very different than a normal world. And when in normal world where we are doing our product management or risk management of the product, cybersecurity IT risk come maybe in top five. It's not the number one. The number one could be the market risk or operational risk, right? In our sense, the blockchain is all tech. The tech becomes the number one. So we have to really secure the parameter, the infrastructure before we even thinking about the product which will be coming underlining that. So the infrastructure is one. So any issuance we do, any changes we do on the platform, right? Whatever you're deploying, just like in your implemented strategy I was talking about in a couple of minutes back, cybersecurity becomes the number one weightage. So you have to really ensure it's completely certified, scrutinized, tested, and whatnot, and audited, third party audit. Second was the regulatory and compliance, because I remember in the poll we were having, regulatory was raised as well. You're absolutely right. You have to know what is your regulatory reporting requirement, right? You need to be in touch with you need to apply all those sanctions, new United Nations designated list or black blue list into your platform. You need to have that rigor, that API or Oracle, as we call it in on the blockchain world, connected to that. All those data privacy laws, you have to keep applying those. So your entire, the first and second is it's all about the infrastructure. It is properly maintained. So these two have 12 and 10%, right? And then it goes from the EML CFT risk, because in you have to not only maintain the off-chain, the one you are doing today, but you have to maintain the on-chain also, and we discuss that in the KYC onboarding process. Then comes your operational risk, meaning processes. If something happened, like if my infrastructure or KYC service or something, transaction monitoring goes down and transaction errors start happening, then how what I'm going to do with those scenarios. So we need to have a BCP, business continuity plan, deployed. And BCP, of course, is when since our focus is on the blockchain, so we are talking about the blockchain BCP. Now, many people will think that why the BCP is coming on the blockchain, because not the blockchain is always online. What is the problem? I'm not talking about the blockchain infrastructure which you are using like Polygon, or I'm talking about a platform like Mabrook. So let's say when you deploy Mabrook as your blockchain infrastructure to tokenize, right? When you're doing tokenization, the processes are happening. Remember in the blue for diagram we were talking about the token management. I'm talking about that. So let's say if the transaction monitoring is happening, and the service identify or flag some transaction. So you need to have the process to make sure that those are there should be no human errors. When the system flags it, the staff are trained to handle that. Then we have fraud rates and market rates and all that. So this will be with you, inshallah. You guys can um, dive deep into it. All right. So those are the risks we need to be aware of. So that's kind of a so that's a purposely built risk management framework that Mabrook applies, and everything is automated, but you can use it and apply it to the process in your infrastructure. Next slide, Asan. And then once we apply those risk management, based on the weightages we were giving, we were doing point scoring. We every issuance we do, like any asset we are onboarding, any client we are onboarding, any change we are doing on our tokenization infrastructure, we can come up with some risk level, right? And we can report this risk level. Why we are reporting those risk level, which is the first column, is because if the risk is, let's say, high, 61 to 70, then we need to put those risk mitigation strategy, like the operation, if the operation loss rate is coming really high, so we need to put mitigation strategy, backup plan, 4I principle, that if this happened, we're going to do that. So everything has to be documented and staff has to be well trained. So it is not like when you do tokenization, you're doing token management, uh, there will be no staff or back office involvement. Remember, we are dealing with a centralized infrastructure. We owe reporting to the regulatory, and we need to protect the investors. We need to have that parameter set in. Now, one good example is that in Bitcoin, Ethereum, when you buy those, and let's say if you forget your wallet access password, all those 23 words, and when you log into your wallet and you try to access and you forget the password, what are you going to do? You're toasted, right? In our tokenization, because we are a regulated centralized infrastructure, we need to give them an option to reset their password. Okay. When I was in US last year, I met somebody in the wealth management and they were doing digital asset custody service. So I was talking to them and they told me a case where a person bought a Bitcoin in I think 2020, 2000 and sorry 2012 or 2013 somewhere, and the guy passed away, right? And his estate planning, because these were wealth managers and they have the estate planning and everything, and he identified Bitcoin as the ownership in that estate. Um, but since there was some problem, the processes were not there. The person at the wealth management overlooked. He would have asked what is the password so we can recover it, or at least you give the password to your next of kin and make sure they are trained to access it. Now this guy passed away, $100 million worth of Bitcoin lost. So what are you going to do in that? So you need to have those risk management set, and that's why we have created this risk category list for you. You can apply and you can do rating. Of course, any issuance you do that at the token level, at the issuance level, you try to benchmark it with the best practices. The best practices we have in the world today are Moody's and S&P, and you can apply those and rate those in Mabrook. Inshallah, when we have time, I'm going to demonstrate you how we do it in Mabrook. Let's move on. Okay. So in the real world asset tokenization, couple of examples are market swings, right? Real estate market dips and whatever. You need to have some mitigation around that. It is not Bitcoin. That's the beauty of the real world asset tokenization. It's not like a Bitcoin or Ethereum, which just goes down and up and down and up, right? A real estate is much stable. Even if it goes down, it comes up, right? Or the gold is similar. The oil would be similar. That's the beauty of it. But let's say if the market has come down, there's a volatility, you can execute some takaful or some mitigation around it. Um, so in cyber threat, hacking to wallet is being done now and every. This is the weak point when it comes to the blockchain. So make sure that your infrastructure is certified, third-party tested, or smart contract are tested with the vulnerability test. At Mabrook level, we do our routine audits, third-party audits, and everything. We try to keep at least minimum 98% anti-hacked or something, because there's no way you can deter all the hacks. The way you can have is your defense strategy. So it's a deep, complex cybersecurity subject. That's not the scope of this training, but we have a CISO who's watching it, and we have couple of bodies who's just working on day and night on that one. EML is that, yeah, you need to be very careful on your cross-chain trade. Remember the example I was giving you that it goes and check the ledger. Yes, ledger is going to tell you that yes, he owns the Bitcoin and he's right. When he's loading into the Bitcoin to your wallet, that becomes your responsibility. So you have to make sure that the source of funds are properly identified and documented for the regulators, and they are monitored depending on the risk profile of the customer. Uh, a couple of example of mitigation is you need to have continuous reserve audits, meaning any reserves you have in terms of liquidity, in terms of what account customer is maintaining at the wallet level. You need to have those audits and validate it. Um, the rest of the example number five is you have to have a reserve like a liquidity reserve, at least for your exchange, or the issuance you are doing, so people can trade easily. Or if something goes south, you have the access to those reserves to execute to take out the money or funds to mitigate the risk, right? You can also take capital protection insurance or the careful around that. Uh, ZK is very important. ZK means zero knowledge. Zero knowledge is a worldwide concept. It's not a tool, it's a concept. Where let's say in our example of a group, when we are executing on chain ID, right? We apply ZK proof that whenever some blockchain asks us that who is he, what this token. So let's say they're asking that, okay, we have a request for this token, we want to verify this token. So we are verifying the token and we are suppressing the private information of our client, right? The investors, right? So we can apply zero knowledge on it. So need to know information, zero knowledge. We just give them the forensics they need to validate from the block. And that's the beauty of the blockchain. That's what I love about blockchain is that you don't have to transfer the private information. Everything can be confirmed in a 100% manner. And of course, you need to have your access given to the Sharia audit and tech audits on your platform so they can do their routine audits. All right, a good example in my group, take on the number two cybersecurity. So we do a multi-sig implementation. We have implemented a multi-sig, and we have implemented Oracle. Oracle in blockchain is the API replacement, right? So we call it Oracle. Multi-sig is multi-signature. That there is always two-party or three-party to sign. Just imagine you have a safety deposit box and you are walking to the branch and you want to access your digital asset. So you need to have your key and somebody at the branch will have his own key. The both key has to go in. Similarly, we have deployed on our wallet a multi-sig. So we are not keeping anything at us. We are maintaining a different infrastructure. When you enter key, we create the key using some cryptographic methods, and then we kind of do that. So we kind of detect those hacks. Oracle for safety is that meaning we expose an API. We always go and check whether the infrastructure is validated. The second key, which is coming from our side, and the key which is coming our side, we go and verify, double check even those wallet is given access to. Okay, let's move on. Next one. Okay. So Asan will come. Just go to the next slide, Asan. Okay, let's go back to the one we were talking about. So we discussed the risk management topic. Let's go back to the one we were talking about after the implementation. We were talking about some implementation steps. Go back, go back, go back. Yeah. So see, we discussed the KYC just to sync up. We discussed the KYC. We discussed the risk management around that, right? Before that, in between, we discussed the revenue stream and whatnot. Let's talk about the token standard again. Okay, this is very important concept to understand because remember I was giving example that you can put some business rule on the token when you're creating those on-chain ID or even token is minted against some asset. Let's talk about the token metadata. Let's go to the next slide, Hasan. Okay. So when you are doing when you are minting a token, all right, there are a couple of core components in your token which you can deploy, right? So one is your name, like uh, take an example. So it can be anybody, right? So remember, token can be issued anything. Like you can issue a token against your mug of tea, right? You can create a unique token for that. So token can be created for anything. So in our example, in our real world asset tokenization example, let's say we are doing an issuance of a student financing Sukuk, like a fund, right? That we are raising debt. So we can, when we are minting token, these are the data, basic data which is going one, two, three. This is mandatory. Number four is not mandatory. Number one is that what is this token about, which where it belongs to, which kind of a project, or in our Islamic bank example, we can tie it up with some Madarba pool. We have to give it like a symbol, which you can think of it like it appears on your trading also, SFST, which is a very unique identifier symbol, right? The decimal, you can go up to 18. Then you have to give the total supply that is logged. So once the total supply is confirmed, then you cannot change it. Or you have to do some other token to do so. So yeah, the total supply is locked. It's not like um, there is no limit. So and remember, any data you are typing, you cannot change it. It's immutable. Then you implant the issuer and asset metadata into it, meaning that what is the unique identifier of that issuer? We are doing KYC, KYB, we generated on-chain ID, it goes into it. Then we also provide the URI. URI is just like a website link. You you need location identifier or something. It is diverting to some link on the blockchain, just like when you save your file on your laptop, on a window laptop, there is some file saving software, right? In blockchain, we the best standard is IPF, interplanetary file system, that you can basically save the file. Whatever, when we are minting the token, we are putting the URI of that specific link into that IPFS. It's a secured blockchain document management system. Think of it like a ECM, electronic content management system, where you're saving the document, right? And we are saving, archiving the evaluation, the details, and yield around it. So it is verifiable. So anybody want to verify, they can go to the URI. URI is linked into the token, and the blockchain can verify, yes, this URI is valid. And when the token is moving, the information moves with the token. Uh, and then the jurisdiction and all that, we can apply that, what jurisdiction it can go, it can work, and all that. We discussed it in the details a little bit earlier. Um, is it compliant with which law should follow, and you put the business rule in that, of the regulators, right? Then the compliance and security measures, meaning what is the information I need to give into it, that and let's say if this token is claimed by Fahad, what is the address of Fahad, what is the wallet address of Fahad. So we tie it up with that. And when the ownership change, of course, then the address of the claim verification will be changed at the wallet level, right, at the blockchain, and that's how we maintain the ledger, that the token is hopping from one place to another place. Any transfer restriction, we discussed that, expiry validity, we can only implant it. Other information we can give, and this is where Mabrook has been great, and I like that to do so. Rather than having the data in PDFs and all there and just minting token with some less information is not good practice. The best practice is that your token should be a complete package. So we continue adding some optional data, which asset is backing it up. So all details of that asset, right? If it is a tangible building, tangible secure collateralized asset against the fund or sukuk we are doing, the URI of it or the URL of it. We also embed the URI of the proof of reserve, that yes, whatever they are claiming in the collateral or the reserve, it is there. Um, Sharia certification can also go the unique identifier of the Sharia asset. We can also put that URI or some tag which identified this unique Sharia audit documentation or whatnot, which is verifiable on the blockchain. Partition ID, meaning the share of classes, and how many classes is there, and the voting right. All right. So I'm just giving a bird eye view of the core difference of why we are tokenizing, because yesterday folks were asking what is the difference between securitization and the tokenization. So of course we are using the blockchain infrastructure to do it, and then blockchain is like a securitization on a steroid, right? It's like a upside. Uh, or doing it efficiently and faster and low cost. Similarly, when we are doing tokenizing, there's like an apple to apple comparison, what you can do in a manual or off-chain world versus the blockchain world. Let's move on. I think we are running out of time. We'll spend maybe 5 minutes more in the course, and then we'll go to the Q&A. Let's go on to the next slide. Yeah. So yeah, I just want to give you the bird eye view of the ecosystem Mabrook has, uh, the infrastructure we have been we have been discussing and talking about, that your bank or fintech or the capital market agency company can apply like as a license entity. This is basically the entire infrastructure or ecosystem we are talking about. It's built on the Polygon in our example. So you can have any blockchain, but what you build on the blockchain is this, right? And then you connect it with your existing fintech, or it can go solo. It can you can basically it's a complete ecosystem of the tokenization. Let's move on. Okay, so I'll just show you a little bit on Mabrook how it looks like. Unfortunately, we don't have much time to go into the deep demo, but at least let me try to give you some snapshot, right? At least you can look into it. So, Asen, can you see my screen? Okay, I assume yes. So
Yes,
if you
we can.
see, all right. So if you see, this is like a typical landing page when you launch your tokenization platform and you are advertising it. This is what they are going to see. It does not look like a techie thing. Is just like a simple UI. There are a couple of issuance that I can click, and I can see each issuance. I can go inside it, and I can see the photographs and everything. The platform is interacting with the blockchain. You don't have to have a blockchain. It tells how many days left and whatnot, what kind of project it is, documentation around it, right? And then I can do the invest now. The moment I hit invest now, it's typical onboarding we discuss about is started. And anything we are doing here, all the customer onboarding which is happening can be monitored by the back office, right? So I just wanted to give you example of give you a visual of as in you can share back that uh, being on deploying on a blockchain infrastructure does not mean that your consumer, your user, or you would be giving or going into the you have to have like a coder level language of blockchain. Basically, if you deploy a ready-made infrastructure, things are pretty easy for and there's not much change management around it. Key example, yeah, I will let you research it. There's only happening like it's talk of the town. I don't have to tell you guys, but yeah, a lot of activities happening, especially at the BlackRock level, and JP Morgan level. They are investing millions and billions of dollar into this R&D of tokenization. They came up with some successful launches. I'll let you research that. UAE in Islamic world, UAE is leading as the most innovative country and embracing tokenization, especially at the real estate level. Let's move on. Future trend is yeah, I think we discussed the future trend. The market size is really big. The sooner the better. I really want you guys to equip yourself with this tokenization basic concept, the blockchain, and inshallah, if we get the chance later on, we'll do some basic blockchain courses as well. But I really want you to study those token standards. Start from the token standard. Start from the market sizing. Maybe do your own project. And we are available if you have any question and answer. You can always reach out to TAIF and we can help you. The future trend in 20th century is going to be an exciting year because United Nations, sorry, not United Nations, USA USA passed the Genius Act, which is a stablecoin act, which is now being implemented in their federal reserve system and their financial system. And anything which happens in US or Wall Street, it has a ripple effect across the world. Nobody's immune. So they approved the Genius Act, which is the Stablecoin Act, USDC Stablecoin or Stablecoin Act. Now they are reviewing in Senate the Clarity Act, which is a hardcore tokenization act, legal law. In that legal law, and it's going to change the financial infrastructure as we see. So it's like think of it as like a complete financial reset. It is, as I was telling you guys yesterday, just to emphasize how important it is 10x than your internet. So whatever changes we see after internet, just think of it as 10x because entire financial structure you see is going to be reset, is going to be a new infrastructure coming in for the from the settlement from the minute level of the payment as we have in the Bitcoin, right? Instant payment to your interbank settlement using the blockchain to your tokenization token being mint for everything, right? So it's a big thing is coming. Um, so I think I cannot emphasize more on that. Just watch for those. Try to learn about Clarity Act if you want to um, do some pick any RWA use case we discussed, take real estate, take Sukuk, take gold, take commodity, and try to create like a thesis or a document and how that tokenization will work. Because now you know what is the process at high level, what are the token standard, what is the risk management I need to do, how I'm going to do KYC of a client, right? You have some basic idea on the token standard metadata. So write at least on a piece of paper how this process is going to sits in your head and wherever you find the gaps you have us you have internet ChatGPT is there and try to basically learn self-learn do self-learning and inshallah we'll do some courses around that as well. All right, if you guys can help me to write this board the execute this board.
Assalamu alaikum. Thank you, Fahad. Thank you very much for joining and giving time. Fahad is joining us from Canada. It's like 7 a.m., 6 a.m. over there. We are sitting in different parts of the world, and the technology is evolving and how we can see and benefit from each other. I would like to take a time while you are polling. This poll is very important for us to get to know, was the class beneficial? Did you get to know the understanding? Is was good or not good? You know, your feedback matters a lot, right? I would like to thank our partners here, Global Islamic Finance Services, GIFS, Adal Advisory. Then we have Al Sadiq Institute, right, for trainings. Then we have DG State, all right, and we have Halal Money Forum, and we have Next If. I would recommend you all keep following these organizations as well. All right, they are always there to support whatever things are happening. TAIF and Mabrook is continuing in the progress in development of the industry in any way possible. So as Fahad says, reach out to us, all right, and we are here to help. Thank you very much once again. Fahad, the poll has ended, and I'm very glad to see you hear the results. I'm just sharing the results for everybody to see. Fahad, are you happy with the overall participation? Is there any questions or online at the moment? Any few two-liners if you want to say out loud? We'll be happy to listen to you about these 2 days session. Did you, what did you get out of it, or do you like such programs, and was it beneficial? So anybody who wants to say something, raise your hand. Inshallah, we'll unmute you. And two line. These all are motivation for us to keep doing such things in future.
As there are questions as well. Do you want me to go into the queue and
Yes,
answer those?
please. Please,
Okay,
please.
and we will also take some live question. All right. So, folks can stay on the call if you guys have something else to do and you are already booked. You can feel free to drop off. So, Bismillah. There are a couple of questions I see on the QA. Assalamu alaikum. Abdul Hamid is asking. Brother Abdul Hamid has a very good question. Can you clarify if you are doing internal chain analysis or user service of chain analysis? We are doing both, brother. It's much deeper than chain analysis because remember that whatever technology we are building, we are coding it, right? So smart code, the smart contract we are building. Chain analysis can have the exposure of it, of course, when you put the address there. But if we, let's say, suppress those or something happened there, so what is going on? So chain analysis will not have the up-to-date information over there. So we are doing bit of both of it. Yes, we are heavily using chain analysis for the outside world. That's the industry best tool we could find. So that's a short and sweet answer to you. Let me know if that answer your question. Okay, I did. Okay, done. And then the other question again from Brother Abdul Hamid. Can you explain more about the Madari pool for gold, silver, and oil, how yields are achieved? So it is, so imagine Madari pool as your place holding of the SPV. Yesterday we spoke about SPV. So you can create an SPV of a gold. You go and buy the gold, take the ownership of it and tokenize that, put those tokens into your Madari pool. You execute those, you sell your token. You will have this slide, but high halal yield token, let's say call it halal yield token, and then you can have another silver and oil combine on it, right? Remember, never so in the IFE standard you cannot commingle the fund. So that's the basic of it, right? That's the guardrail. But you can combine those yields coming from those trading, right? Whatever revenue you're generating from the trading, and then you can push it back to your Madare pool, right? And just like a commodity trading would happen. So that's the answer for you. And Hanani mentioned four. I think you were responding to the poll. Thank you very much for doing that. Market volatility, yes, you are right. That's one of the risks. Okay. Okay. Hanani has another question. Does Mabrook offer to research and potential investors to use tests on their network blockchain as it does on the MetaMask, for example, Sequoia Ethereum Corner? No, we haven't launched the testnet yet. Remember, Mabrook is not a blockchain. It's not like a HAQQ Huck network or a level one solution. Mabrook is a level two solution built on Polygon. But if you want to access our sandbox environment and you want to do something, just write an email to us and or us, and then we'll talk about that. Not a problem, inshallah. We really want you to learn and embrace it. Ahmad Afandi from Indonesia, Salam brother. He's my best friend, so he's asking which one of the more appropriate for tokenized asset-backed versus asset-based. Of course, asset-backed. And we follow IEC standard 62 over that. So whatever the standard is saying, Mabrook and any of the platform out there must follow IFE, not anything else, and has to be certified. Abdul Hamid Nuruddin asks, how can individual investor partner with Mabrook? So individual investor can partner with we are inshallah once we get our regulatory bit sort out and we launch out in Canada, inshallah, then you are more than welcome to invest on the projects. If you want to partner with Mabook, just write to us, inshallah, and we take care from there, inshallah. You can write to me or SN to do so. There's an email support@almabrook.io. You can also send an email to that support@mabrook.io with your inquiry, inshallah. All right. Any live question, Hassan, on the mic? Okay. Anybody want to ask any live questions from us? They can raise their hand and we can unmute them, inshallah. All right. Sounds like none. So, Alhamdulillah, thank you very much for your time and listening to us. Of course, we are not perfect. So, if we have said something which is wrong information or something, forgive us for that. Uh, the important takeaway of this class is to give you to emphasize on the how important it is to understand the tokenization, the blockchain itself, and its application in Islamic finance, because it becomes our responsibility to share knowledge. And we are like torches, right? So one torch kind of ignite another torch. So now this becomes your responsibility to spread the word out. The video recording will be available. If you feel this helps, this information has helped you, please do not forget it to share it with your friends and family. All right, because that's our responsibility, inshallah. So I think if there are no questions, we can call it a day, inshallah, and we will see you soon. This course for RWA tokenization revenue opportunity is concluded then. Assalamu alaikum warahmatullahi wabarakatuh.